Hi, and welcome to segment 3 in our three-part series on the Wealth Preservation Trust. I'm your host, Attorney Michael Potter. Now, as we talked about before, the Wealth Preservation Trust fulfills a number of functions. It can be an excellent estate planning and tax planning tool. It can provide wonderful privacy for you and your family. And it can also help preserve the assets you've worked so hard to attain from creditors and lawsuits. So I'd like you to come along and pay attention as we look more closely at how the Wealth Preservation Trust functions in its ownership of assets and how it can protect them. Now, the relationship between the Wealth Preservation Trust and the assets that you most want to protect can either be direct or indirect, and depending on how many obstacles you wish to put in front of creditors or lawsuit adversaries. Now, there are two key critical elements that you have to keep in mind when protecting assets. The first of these is to establish the trust and to transfer ownership of the assets into the trust structure so that they have the protection that you're seeking to get. But the second part may be even more crucial, and that's timing. It's been said that timing is the difference between a hero and a fool. And when it comes to asset protection, that's really true. Now, there's a couple of different ways to go with the transfer of assets. You can either transfer them directly into the trust, which is one way to go, or you can transfer them into an entity such as a limited liability company or a limited partnership or corporation, and then have those entities transferred into the ownership of the trust, giving you a couple of layers. That might be a very good way to go. Let's talk for just a moment about the concept of layering. Now, if you've attended one of my many workshops around the United States, you probably have heard me talk about the concept of layers on the onion, where if you have an onion and you peel back that first layer, what happens? Well, there's another layer, and a small chemical reaction begins to take place. And by the time you get to the third or fourth layer, enough of that chemical reaction has taken place such that you're starting to shed tears and you want to get away from that onion. Do you know what I mean? So we can apply a similar concept in asset protection. Now, there's a lot of flexibility in what the Wealth Preservation Trust can own. Some people just make a direct transfer of assets directly into the trust, and that's fine. But there's another way that might be even stronger depending upon your situation, and that is to use a combination of entities. For example, you might transfer rental properties into an LLC, or maybe you'd use a limited partnership. And then with a corporation, LLC, or limited partnership, you could transfer a majority ownership interest in those entities into the Wealth Preservation Trust, giving you multiple layers of protection as against a lawsuit adversary or future unknown creditor. Very good way to go. Now, you may or may not be aware, but just about anything that's in your personal name can be taken away from you. And if you transfer them when you're already in a crisis situation like a divorce or a lawsuit, and now they're transferred, the litigators out there would like to say that you're engaging in fraudulent transfer. So your timing is really important, and you want to avoid making transfers in a period of duress where you're under the duress of a lawsuit or a divorce or a major tax action. You want to avoid that kind of thing because it's very important that you move the assets while your legal seas are still calm. Now, one of the things that the Wealth Preservation Trust can own outside of your taxable estate and beyond the reach of creditors and lawsuits is your life insurance. So let's say that the Wealth Preservation Trust owns a life insurance policy on you. When it pays off eventually, it would pay off tax-free, both income tax-free and estate tax-free, into the Wealth Preservation Trust, where not only would it provide for your loved ones, but it could not be reached by lawsuit or other creditors. So it's a great way to protect that money, and I think that this is something you should take a look at. Well, as usual, I've given you a lot to think about, and I'm sure you have some questions. If you do, I'm more than glad to help you. I'm attorney Michael Potter, and I look forward to hearing from you.